Hello everybody, this is Preston Giles and today I'll be taking you through my trend analysis. Table of contents for today, so we'll be going through the introduction, a little bit of background, the problem at hand, conclusions I've made, and the end. As stated earlier, my name Preston Giles, currently with Full Sail University going through the Patterns and Recognition course, and today's date is 06/13/2021. So a little bit of background. A client came to me to ask what I thought about investing in certain restaurant chains. So I took some time to do my analysis. Basically, I want to know which chains are on their way up, which ones are on their way down, and I'm looking for the best investment possible, basically the hidden treasure. So the problem. So first I needed to determine the data that's needed. So essentially selecting 5 QSRs that are on their way up, and then 5 that are on their way down for a total of 10. What trends do I see by segment? And what I mean by segment, it could be by categories like burger, chicken, global, ethnic, for instance. And then which segments are moving and how are they moving? So what seems to be deciding factors for success or failure of a chain? What 3 QSRs offer the best opportunity to invest? What were the deciding factors to get these to be in my short list? And then just a few financial projections. So determining the data that's needed, I wanted at least 5 years of data with relevant attributes, so such as revenue, chains, are they company owned or are they franchise opportunities? And then I need this from a reliable source, and I need at least 20 separate chains comprising several different segments. So the data, essentially just kind of a quick breakdown so you can see the average sales by category. There's also a lot more that goes into it, but also the category popularity. So as you can see, burgers kind of hit the top spot here, followed closely by chicken and sandwich, and then falling down from snack to global. So the 5 QSRs going up, Chick-fil-A, In-N-Out, Panda Express, Raising Cane's, and Whataburger. So what you can basically see from all these charts, as the bars go down, that's their increase in rank. And then as that line goes up, that is their increase in revenue. So what you can see from all of these is a steady increase in revenue or sudden increase in revenue, but also a increase in rank. So for my 5 QSRs going down, I've chosen El Pollo Loco, Jack in the Box, Papa Murphy's, Pizza Hut, and Subway. So essentially everything that I've just said, and then kind of picking the ones that aren't doing so well. So as you can see, their rank is consistently getting higher, meaning that, getting lower, meaning that they're not ranking as high as some of the others. And then their profits are either diminishing or they're just not doing as well as others. For my segment performance, overall, as you can see, the burger segment is by far one of the strongest performers and is one of the most heavily saturated as far as the chains go. So basically different companies comprising of that category. The snack and chicken segments both seem to be on the rise, as well as the global taking a pretty good curve from 2015 to 2018 and only expected to get stronger. And then the snack and chicken obviously on the rise, but with ethnic and sandwiches are also both tending to stall out right now. So my deciding factors for success, the stable corporate growth, essentially how many company chains they're adding per month instead of losing, and then the healthy franchise to corporate margin. So What I've seen and noticed is a trend and a good margin between franchise and company-owned units, and then relatively low change in units over the years, but also, obviously revenue increase. My top 3 QSRs to invest: 1, Raising Cane's; 2, Whataburger, and 3, Panda Express. And so the reason that I've kind of gone into these, I'll get a little bit more into, but as you can see, both of these, they're not highly ranked, but their rank is getting better. Also, revenues are getting a lot better as they go as well. The geographical breakdown of my top 3. So Raising Cane's, as you can see, is consolidated to mainly the major cities, but also mostly along the eastern central part of the United States. And so what we can see here is room to grow. Whataburger essentially is pretty much just south of the United States and the southern half, essentially. And so what you can see is a big mix of rural and urban. And this is just due to the fact that it is a very popular chain in the South. But what this also means is that there's a lot of room to grow if it were to expand out. Panda Express is consolidated mainly to major cities, but is geographically spread fairly even across the United States. There's just a little bit north central that's kind of lacking, but overall, fairly even spread, not as much room to grow as some of the others. So Raising Cane's, first thing to note here, they haven't been around as long as some of the others, but they are doing well in the space that they're currently in, and they're also in a growing segment. For Whataburger, as you can see, they've been around a while, being mainly located in the South. They don't have as much geographical spread as some of the others, but from what they do have, they do really well. And so if they were to spread out and do things a little bit differently as far as maintaining that southern United States nature, I think that they would continue to do really well and also pick up as far as sales and total units. Panda Express, as you can see, been around a while. Revenue-wise, they do really, really well. However, they are already pretty well geographically spread. Not a lot of room for growth compared to the others. As far as their unit growth and margins go, everything is fairly well straightforward. Good margins, good acquisitions, and change in units. This is Raising Cane's. So essentially, moderate room for geographical spread, relatively new chain in a growing segment, plenty of room for growth, especially in the chicken segment, and then overall 19% increase in annual sales since 2015. And from this segment, there's a lot of room for growth, especially with this chain as it continues to grow. Whataburger conclusions. So there's a large room for geographical spread. The burger segment has done very well historically and only continues to grow. And then there's overall been around a 30% increase in annual sales since 2015. But it's important to take note that it's with a minimal location count. So with the widespread, if you were to spread it out, you can only expect that number to go up. So Panda Express conclusions. 1, low room for geographical spread. It's already fairly well spread out. Panda Express has transitioned into a global chain, so that does take that spread up a notch. As if you consider, other countries like Japan, Canada, China, things of that nature. Number 3, there's been a 41% increase in annual sales since 2015, but it is in a crowded market space. So sales could continue to increase as long as this chain continues to do well, but there's not as much opportunity as some of the others that I identified. Here's my references. And that's the end. Thank you very much.